I think today we are on time. We managed to start at 9 o'clock. Okay, let me just do mic check. Mic test, mic test. Okay, I think we are good to go. We are good to go. Any point of time cannot hear me or mic goes down, please let me know. If not, I end up talking to myself. Okay, let me just do a final one. Final check. Okay, I think we are clear, we are clear. Hey, welcome everyone. We will start in like 30 seconds more, okay? So, starting soon. By the way, warm welcome to everyone. Hope work was good for you all. And I know today is Tuesday only, but don't worry, Wednesday, Thursday coming soon, and then it'll be Friday weekend. Then everyone can relax. So same thing, we always stream Monday to Thursday, 9 p.m. time zone is GMT +8. So Friday and weekends we usually don't stream, so everyone can take a rest. If not, people say, hey Pigeon bro, keep listening to talk. Hey, boring lah, Pigeon bro, stop talking here, no? Like bird like that, keep choo. Okay. Okay. So same thing, 3 segments. Okay, usually we will do a quick market update, see how's the market sentiments, like any particular stocks you want to talk about, discussion. First segment. Second segment is options, where we dive into the market as well, look into the market for any opportunities, and I'll share with you live all the things like any plans to sell any options, close any contracts, all live, so you all can have a idea of what are my plans for today and the subsequent weeks. So we see any opportunities, okay, when 9:30 market opens, any chance for us to make money. Okay, wait, let me see. Okay, market is opening today. Sometimes because I'm in Singapore now, sometimes US may be on holidays and I miss it. Then market never opens. So today market open, I've checked. Hey, by the way, Nvidia result on Wednesday. So Singapore local time will be Thursday probably. Market closes Wednesday, and then Nvidia will announce results. So interesting, very interesting. I think it's very important. Nvidia is always one of the key and one of the big components of the SPY 500 on the market. So if Nvidia announce bad results, I think every company will likely be affected. But honestly, my take is Nvidia likely will announce pretty decent result. That's my take. Okay, I cannot predict the future, but my take is likely there will be good result because of all the sales that he has managed to lock in and all the future partnership with all the giants from some South Korea, Samsung, Hyundai, Japan, all these things. He go around, make friends, even China sell chips to everybody. So likely the results will be good, likely. Okay, I drink a bit of water, then we kickstart already. Okay, okay, I put my head on top. So first thing today we won't talk too much about the first component about the stock. So I don't really have much to cover because I want to spend a bit more time on the options component today, because we want to talk a little bit about LEAPS, long expiry calls, and the PMCC, poor man's covered call. Okay, because there are some interest in it and it mirrors a bit of the option view strategy. So I want to just give my take a bit on it, and I'll share with you my experience on PMCC. Remember, not PCC, it's PMCC, okay? PCC stands for Play Chinese Chess. We are not playing Chinese chess today. We are doing a poor man's cover call today discussion. And then the last segment, we will just have a quick chit chat. And I want to share with you all something like relocating and why some other countries, whereby cheaper Southeast Asia country could be ideal if you want to retire early. And it's something that you really can consider. Okay, so let's start. Okay, so today the stock component part, I just want to talk about upcoming Nvidia results. So I share with you, I will try to cover it, and then I'll do a short video on it. And my take is always, my personal take is when Nvidia announce good result, there's always a bit of price drop because of profit taking. And then once the next result incoming, like 2 months before the next quarter result, then Nvidia will start slowly trending upwards again. My personal take is long run, Nvidia should keep trending upwards because of all the sales, the chips heavy in demand. And you know, actually Nvidia has a mini ecosystem in terms of their AI software, all the Vera Rubin, all these things. To utilize another company's chips, it means you may not be able to use Nvidia, their ecosystem, their software for AI. So AI has their own ecosystem. So that's why I think at this juncture, with every big companies there ordering Nvidia chips, and they're constantly producing better chips. I think the later is not Vera Rubin or something, and the transistor and some capacity I can generate more tokens, that kind. So I won't delve too much in it. So just want to let you all know that my take on Nvidia, and long run, I still see that it will likely trend upwards. So like I said, I want to build Nvidia position up quickly to almost hit 10%. So I will keep adding Nvidia until at least probably, hopefully I can hit about 100 plus K worth of Nvidia. I'll let you all know, probably let's say if there's a dip after the earnings, I will likely buy some and I'll keep you updated. Okay, that's all okay for this component part. Then we move on to options with it. And let me have a chit chat with you. Hey, Fatty bro, good to see you. Fatty bro, good to see you. Thanks for dropping by. Thanks for dropping by. Hey, good evening to you. You love your work actually. Hey, what you work as, Fatty bro? Can share no? If not comfortable to share, it's okay. Respect your privacy. But if you can share a little bit of what you do, you know, share with us so we can learn from you also. Hey, by the way, Fatty, one interesting part. I don't know why I cannot see your comment in the chat here, but I can see it here. So I'm not sure, is it YouTube stop you from doing live chat? I don't know, you know. Just to share with you, but I cannot see you chatting here in the screen below. But in front, I can see you chatting with us. So I'm not sure, is it YouTube so-called shadow ban you from live chat or what? I don't know. But be assured, I don't ban people, and okay, I'm happy to hear different views from everyone. So I don't know why so Fatty, maybe for some reason YouTube don't know what software or whatever, so I cannot see your comments here. But I can read from here, okay? I can read from here. You work as a pen tester? Okay. So your job is actually the hack stuff. Okay. Not hacking, right? It's use computer to hack, right? So maybe that's why it's interesting. Okay. You deal with all the technology stuff, okay. So maybe can see you're quite versed with tech stocks also. Okay. By the way, if you were here in the previous stream, feel free to say hi, say hello to us. Then we can chit chat also. And if I miss your comment, just repeat, because I try my best to answer all comments. Okay, but good to see you, Fatty bro. Thanks for dropping by. And if anyone else, you know, in the previous stream, feel free to say hello to us, and then we can chit chat. Okay, so now let's move on to LEAPS. Okay, the options component called PMCC, Poor Man's Covered Call. So disclaimer, I've used PMCC in the past like 5 to 10 times. Honestly, I only make a little bit of profit. Out of the 10 PMCC that I did, okay, 10 PMCC calls that I bought and sold, honestly, I only make a tiny bit of money. In fact, out of 10, right, maybe 3 were loss making, to be honest. So that's why I don't talk about PMCC, because honestly, I don't think I'm an expert in it. Secondly, I tried before. It doesn't work for me personally. I only like to talk about strategies that personally have worked for me and consistently make me money. That's why the option wheel strategy, I will dive very deep inside, because I'm quite well versed in it. But PMCC, I'm not well versed, okay, I'm not expert, and I've tried before. It doesn't really make me that much money. And like I said, of all 10 contracts I dealt with, 3 were actually loss making. So if any one of you are expert, feel free to share with us your thoughts on this PMCC, Poor Man's Covered Call. Okay, so I want to keep it very simple because it can be quite in-depth. I don't want to bore you all, okay? But there are some interest in knowing about, asking me to talk about LEAPS and PMCC. So I'll just cover a bit, conclusion, and give you my perspective why I don't do it anymore. Okay, firstly, what is LEAPS? LEAPS is LEAPS, LEAPS. Okay, you leap over. It just means, okay, the technical term is some long-term equity anticipation security. In short, it just means long-term dated options contract, that's all. Okay, long-term option contract. Okay, that's LEAPS. So it can be both direction, whether you are selling a LEAP or buying a LEAP. So as long as you sell a long-term option contract or buy a long-term option contract like 1 year, 2 years, 3 years, it's generally referred to as LEAPS. Okay, so that's number one. That's all. So number two is called PMCC. It stands for Poor Man's Covered Call. Okay, Poor Man's Covered Call utilize LEAPS, long-term expiry option. So how it works is you buy a dip in the money option contract. So I don't want to confuse you with what dip in the money, out of the money, at the money. We don't talk about that. Okay, just keep it simple. It's just like selling a cash cover put. It's a covered call in the option view strategy. I believe most of you know what is a covered call. It's basically you have 100 shares. Example, you have 100 shares of Apple. You sell a covered call contract or option on it. So example, strike price at 120. If the stock goes above 120, your 100 shares of Apple will be called away. And that is called a covered call. Of course, when you sell a covered call options, you get premiums. Okay, you get money for sure. So that is that is covered call. Okay, that's basically covered call in the option view strategy. Now, poor man's covered call actually is largely similar. The only difference is you don't own the stocks. Okay, I repeat, you don't own the shares. Instead, you own a covered call of that share, of that stock. So once again, I give you an example. Example, when you sell covered calls, okay, you sell covered calls. You are setting a price and an agreement to sell your shares away, right? Your 100 shares can be called away. Now imagine you are on the buyer side. You are now buying from me. Okay, we always talk about selling, right? Now imagine you are the buyer. You are buying this contract. What does it mean? That means when you buy the contract, you must pay money, okay? Pay. Remember, every time we sell contract, we collect premium, very shook, right? Very happy, feels good. Now it's time to pay back. Okay? Now you're the buyer. You buy the contract from someone. You have to pay, okay? Can be quite expensive. For poor man's covered call, sometimes we buy very deep in the money, okay? We don't know about that, okay? We just say something that it's not cheap, okay? Buying contracts are not cheap, okay? Especially buying covered calls contract. So you pay money for it. And then once you pay, you get the contract, you have the right to buy 100 shares at their strike price. Okay, so same thing, like just the other opposite end. Buyer who buys the covered call contract now has the right to buy 100 shares of this company at that strike price. Okay, so be it any strike price can be 50, 60 depending. Usually we will buy the one with a low strike price. Okay, there are other reasons like so the change in delta will be closer mirror to the strike price. But we don't talk about that, okay? Let's not confuse us with all the theta, delta, all these things. Just keep it simple. So instead of owning 100 shares of Apple in your hands, you own a covered call contract that gives you the right to buy 100 shares of Apple at their fixed price, regardless of how much the stock price moves, okay? So you think logically, if I have a contract that allows me to buy 100 shares, okay, 100 shares of Apple, technically, it also means you kind of own 100 shares of Apple. Correct? Okay. So that's the first key concept, okay, of PMCC. You are actually not owning the shares, you are actually buying a covered call contract that sort of give you the right to buy 100 shares of Apple. So you are technically owning 100 shares of Apple, but in the terms of a contract. So if you exercise it, you will get the 100 shares of Apple. Simple as that. So now that you have a contract that gives you the right to buy 100 shares of Apple, what do? You start selling covered calls against it. It's just like when you have 100 shares of Apple, you sell covered call against it to make premiums, right? You sell a bit of further strike price, delta, so you keep collecting premiums. Same thing for poor man's covered call. Instead of owning the 100 shares, you own a covered call, and then you sell shorter terms covered call against it. So example, go back to Apple, okay? I have a covered call contract I bought under my name. I paid money for it. So it gives me the right to buy 100 shares of Apple. Now, I keep selling covered call against it. So every time I sell a Apple covered call for like 1 month, 2 months, I will make $200. Then I keep selling. So I bought a long-term contract. Like I said, I bought a LEAP, a long-term expiry contract. can be 2 or 3 years. Then every month, I keep selling covered call against it and I keep earning premiums. So that's the whole concept of PMCC. That's all. It just means instead of owning the 100 shares outright, which is capital intensive, okay, capital intensive. Whereas compared that you buy a contract, it's way capital less intensive. 100 shares of Apple can cost you 10K, but a contract, you buy a contract that gives you the right to buy 100 shares of Apple, maybe cost $50 only. Okay, so it's not $50, maybe cost like 5,000 compared to $10,000. So you can see it's way less capital intensive. So that's the whole idea of PMCC. Okay, that's all. Okay, any question can let me know about this poor man's cover call. Okay, next we move on to the good scenario and bad scenario. Then I give you the conclusion, end of story, okay? Okay, so what is the issue with PMCC? What is the downside? Okay, I share with you. PMCC is a bit different from the option view strategy because of certain downside that makes it very limiting and not ideal. So I give you the most common scenario, okay? Imagine you have PMCC, you are doing a poor man's cover call. You have a contract, a cover call contract for 100 shares of Apple, and you have sold like 1 month, so 1 month short-term call contract against it. So stock price, okay, let's say Apple is $100. Let's say Apple now is $100, it's valued $100. Then it suddenly crashed to $50. Okay, crashed to $50. Now, your short-term call that you sold, okay, the 1 month, right? Your short-term call you sold, right? Likely will expire worthless because the stock price dropped. So your call will expire worthless. No shares will get called away. You collect the premiums from that side, that 1 month contract you sold. But on the other hand, your long-term expiry contract, the LEAP part, okay, you bought that contract, we call it LEAP. The LEAP can lose a lot of value because of the huge drop. And the drop can be like thousands of dollars. So you think logically, you earn a bit of money from the short-term call contract, the 1 month you sold, but you're suffering huge losses from the covered call you bought or the LEAPS, the LEAP that you bought. Now, because you have lost so much money from the LEAP, the small premiums you collected from the angle that you sold cannot cover the LEAPS that you bought. That is a big issue. Okay, that is number one big issue. So in short, you win on the short call, but you lose on the LEAP. Overall, you are still losing because the amount you lost is too much, especially when the stock price dropped a lot. So that's scenario number one. Now, what is the downside of this issue compared to the option view strategy? So I tell you, remember when you buy a covered call, there is a time duration. Okay, your covered call lasts for 1 or 2 years. Once the contract is up, right, time is up, your money totally disappear. So whether you like it or not, it's gone. Gone for good. Whereas if you have the stock, if you actually own the Apple shares, you can hold it forever. Time is on your side. You can afford to hold 10, 20, 30 years, no problem. But if you buy the option contract that LEAP, it can only last for a certain duration and you will lose all the money you spend on it. So that's the biggest difference here. One thing about PMCC is you are working against time. Time is not on your side. You have to keep trying to sell a lot of call option against it to try to earn enough premium to cover back whatever you spend buying the LEAP. That is the biggest issue. Whereby it's the option view strategy, you sell covered call, you can wait 10, 20 years, no problem. I'm confident ETF or Apple can go back up, I can afford to wait. So that's the biggest difference and the biggest downside of PMCC, time decay. You are working against time. So that's number one. I just share with you, there's many scenarios, but let me just share a second one, then we move on to the positive side. Now the second scenario is, if the stock stay flat for too long, that means sideways for too long, it can also be an issue. So let me share with you, same thing again. You bought a LEAP, okay, a long-term covered call. Then same scenario, Apple, then you sell short-term covered call against it, the Apple. Yes, you will keep earning money from the short-term calls that you sold against it because it stays sideline. Your strike price you set higher. Then you keep expiring, okay. Yeah, you can earn from this side, which is the call option you sold. But remember, your LEAP side is also losing value. Remember, we talked about the time duration, like 1, 2 years. every day it is losing value. If the stock stay flat, there is a very high possibility the amount of premiums you make from selling all the short-term calls cannot cover the leap costs. The leap is expensive, I assure you. You go and try buying a long-term Apple contract, okay? It can cost you hundreds or thousands of dollars easily. So it's not cheap. So if the stock stay flat for a long period of time, the premium you sell every month you sell cannot even cover your leap costs. That is the biggest issue. Okay, so that's the next scenario. Okay, now there's also other scenarios like the stock. If the stock move up too fast, also a problem. But let's not delve so far. If not, people all confused already. So those are the scenarios that makes LEAPS, this PMCC overall, a bad strategy. Okay, personally, if you have used PMCC, it works for you, happy for you, please continue to do it, make money, I feel happy for you. But honestly, I think that's the biggest downside. That's why I no longer touch PMCC. Okay, let me see. Okay, now I tell you what is the good scenario for PMCC. Okay, I tell you some of the good positive scenario. Okay, one of the good scenario is the slow, moderate, bullish market. Not too fast, the market slowly trend upwards for your stock. Like Apple slowly move up. That is the most ideal scenario for PMCC. Now let me explain to you, okay? Example, let's say example, Apple share. Apple stock costs $100, okay, $100. You own the LEAPS, okay? Let's say you have bought LEAPS in the past, not say past, you bought a LEAP for Apple, okay, maybe strike price 70, okay, anything, okay, we see how. So you keep selling call against it. Okay, you keep selling call because you bought the LEAP, you keep selling the short-term cover call, keep selling every month to make premiums, fund premiums, okay? But remember, the stock price is slowly graduating going up. And your strike price at the cover call side, no problem, you manage it and you just keep selling. So what happens is that your short-term calls, okay, that you sold contract on, keep expiring worthless because the stock is moving so slowly, slow and moderate bullish, right? And your strike price, you keep setting higher and every month it keep expiring worthless. If it go up too fast, then your leap will suffer. But because it goes slowly, then your contract keep expire, I keep farming premiums from the short-term calls. But because your stock keep going up in value, your LEAPS also actually can gain in value. Remember, when the stock price goes up, your LEAPS actually gain in value. Okay, that's the key part, okay? Correct, if I'm not, yeah, correct. So your LEAP will gain value slowly because price keep going up and your cover call contract you bought allows you to buy 100 shares of a stock at a fixed price, example $100, and stock market keep going up. So your LEAP will keep increasing in value. So the whole idea is you want your LEAP that you bought the long-term contract to keep going up in value. At the same time, you sell short-term options cover call to keep farming the premiums. So that's the scenario. I want LEAP to go up in value and I want my short-term contract to keep making me money. So that's the ideal scenario of doing the poor man's covered call. It is so called, okay, they call it slow, moderate, bullish market. Now you ask yourself, when are the chances of having slow, moderate, bullish market? What are the chances? Honestly, hardly, to be honest. Most of the time I feel is the market, the stock will burst 20%, 10%, then it stop bursting. Then maybe sideways for a long time, then burst again, that kind of stuff. I hardly nowadays see slow, moderate, bullish market. So, I mean, if it works for you, good. But personally, it doesn't work for me to find such an ideal scenario in order for PMCC to work. Okay. Yeah, I hope it's not too confusing, too deep, okay? Because I know PMCC is a bit heavy, but I just try to summarize, make it very simple, okay? Very simple. Because PMCC, I know, need a bit of thinking through and processing to understand. So I try to keep it very simple. Okay, so that's why I won't speak further. In summary, for poor man's covered call to work, The best scenario is slow, moderate, bullish market. I repeat, slow, moderate, bullish market is the most ideal for PMCC. Now, if the stock stays sideways, trend sideways, PMCC may work, but it may not work also. Okay, like I said, example, the amount of premiums you make from the covered call you sold sometimes cannot cover your LEAPS. It has happened to me before. So that's why I just feel it's not worth it. Okay, and if there is a huge crash, okay, or some kind of decline, usually it's very bad for PMCC. It's terrible. Okay, especially a huge crash is super terrible for PMCC. In fact, if you go watch some YouTuber, okay, I know some of them convert all their stocks to LEAPS because they can double up. You see, 100 shares of Apple maybe cost me 10K, okay? But if I buy a LEAP, maybe it only cost me 5K. And if let's say Apple were to keep increasing in value, I can literally double my money increasing. You know, it's like something like contra like that. You're leveraging. Instead of owning 100 shares of Apple in my hand, I own multiple contracts of Apple that gives me the right to buy 100 shares of Apple. That can increase your portfolio very quickly, especially if there's a bull run. I tell you, you can make tons of money. But if the market crash gone case, we don't even need to talk about PMCC. Just talk about the LEAPS, the long-term expiry option contract. You will be in big trouble. And once it expires, let's say, example, a very unfortunate event, which can happen quite frequently, Apple stay flat for 1 or 2 years. Your contract expire worthless, all your money gone. Then Apple start trending upwards. Oh my, you missed the rally after that. Gone case. But imagine you own 100 shares of Apple. You don't do all these LEAPS. You can hold for 2 years, no problem. Market remain depressed. Okay, I lose money. But after that, Apple start recovering. I start to enjoy the rally. So that's the biggest difference between PMCC and the option view strategy, selling covered call. And that's also the difference between LEAPS, which is just contract, versus actually owning the shares. Okay, can I? Okay, can. So that's all. I won't speak further. Just remember, overall PMCC is essentially a moderate, slow, bullish strategy. You're assuming market will be slow and moderately bullish, and that is the ideal scenario for PMCC. So honestly, you can see the downside of PMCC. You are working against time. Time decay is a big issue, and you're hoping for a very ideal market, a slow, moderate, bullish market. How often does that occur? You just think, okay. So just be aware if you are interested in PMCC. Okay, any questions about PMCC, feel free to let me know. That's my limited take on PMCC. I probably won't talk about it anymore. Maybe I'll do a short video, maybe not. Just want to share this part because you can see it has some close elements with selling cash covered costs in the option view strategy. Option view strategy is always sell cash cover put, get assignment, then sell covered call and let it get caught away. So the covered call part has quite a lot of similarity to the PMCC, but there are differences. Okay, let me see any comments or not. Okay. Oi Phuket CNKABX. Okay, I'm not sure what does that mean. Maybe some Thai language. But thanks for dropping by. If you were here in previous stream, feel free to say hello, okay? How come I'm blocked? But it's okay lah. I think it's YouTube. Yeah, I don't know why, Fatty. I can see your comments in my short video. Everyone can see. But for some reason in the live chat, it doesn't appear. But in this live chat here, in my screen, it appears. So don't know lah. Maybe YouTube software like you say. Okay, the chance of it happening is very slim if you trade individual stock. Too volatile, except if you trade index like SPY. Yeah, I mean, I guess you're referring to PMCC, is it, for SPY? So individual stocks, yeah, I think because of the volatility, I think PMCC not very worth it. Like we said earlier, PMCC require a slow, moderate, bullish market to function well. Whereas the option view strategy, if you do individual stock, right, where the stock are so volatile, it is not ideal for PMCC. Individual stock can remain depressed for a long period of time or can suddenly spike up, which are all bad scenarios for PMCC, poor man's covered call. So actually I agree with you. I really agree with you that index is more ideal for PMCC. Hey Yaf, good to see you, Yaf. Hey, finally good to see you. We were waiting for you, man, Yaf. So just now we covered PMCC, POMES cover call. So if you want to hear about it later, you just replay the VOD, okay? So we were talking about POMES cover call having quite a large similarity with the covered call component of the option view strategy. But of course, PMCC is less capital intensive as compared to actually owning the shares. So I give a quick summary earlier. So be assured I never speak too much about PMCC, maybe 15 or 18 minutes only. I didn't talk too long. So if you are keen, you can later watch the VOD. Okay, Ken, if any more comments or questions about PMCC, POMES cover call strategy, feel free to let me know. I try my best to answer, and then we will move on to the stock market already. I hope everything is doing well for you. Yep. Tuesday already, okay? Hang on tight. Then we got Wednesday, Thursday, Friday, then can relax already. Actually quite fast, Tuesday already. Tomorrow, Wednesday already. Okay, okay, then in this case, let's move on to the stock market now, okay? Don't want to bore you all with the POMES covered call discussion. Okay, I change screen first, Okay, same thing. Let me shift the screen a bit. Okay, so my options contract is on the first page, okay, first screen. Okay, let's see what's next. Okay, so stock market open, let's go in and see any opportunities. Let me refresh. Okay, let's see the red part first. Wait, my computer lagging. Pardon me, bros and sister. Please. Okay, Starbucks. Oh yeah. Hey, fatty bro. China stock keep dropping. Tencent drop. iShares drop. FXI. Not IX, FXI also dropping. MQ dropping also. MQ also down. Alibaba still down. Gone case. Honestly, I don't have much hope on China stocks. I really don't pin much hope. So like I said, if next month no recovery, I just cut 20%, 25% of the China stock. Just take the loss and move on. Okay, let me see. Okay, Microsoft. Okay, I see how maybe. Okay, so maybe if market were to for Microsoft, maybe the next couple of hours, Microsoft continue to drop in value, I may sell a cash cover put. Okay, let me see how many Microsoft puts I have now. Because I don't want to overcommit on Microsoft also. Okay, I have one Microsoft put only, so I think I'll be quite comfortable to sell a Microsoft put. So I share with you my plan right now upfront, okay? So in the next couple of hours, I will be monitoring Microsoft. If Microsoft can trend downwards a bit more, likely I will sell a cash cover put. Likely, okay, I will sell a bit of a further strike price. I see how first. So maybe 0.1, 0.2 delta for now. Because I want to manage the risk a little bit. Of course, if Microsoft were to drop quite a lot, maybe like 440 that kind, then I may even sell a 0.3 delta, the closest strike price, so I can have a higher premiums. Overall, I just want a higher margin of safety. Because remember, if you are buying a share at a high price, your margin of safety is lower. So this is something you want to consider when you're selling cash cover put. Margin of safety is quite important. You don't want to overcommit for the strike price. So remember, high delta means higher strike price, which means higher premium, but it can be a trap. Lower strike price, yes, you will get lesser premium, but usually it's much safer because less likely to get assigned. So just want to remind everyone, if you are doing options trading, especially selling cash cover put, always don't be greedy. Always consider the strike price and the premiums. Yes, you get lesser premiums, but not getting so many assignments is also one of the very important factors. Remember, we are here to make money consistently. We want to keep the wheel spinning, the option wheel strategy moving. So multiple small wins to add up to a big win. Okay, Ken. Okay, so let me see, Hashbro, McDonald. Okay, that's all. So that's all for my plans for the cash cover put today. So I just update you all. Okay, so let's just talk about any green markets. Okay, any green stocks. Okay, Nvidia goes back up again. Okay, that's fine. Okay, Alphabet also there. Apple also there. Okay, my top three favorite company: Apple, Microsoft, and Alphabet still doing fine. SPY still about 766. So overall market today is pretty much sideways. So I don't think there's any huge news to be aware of. Okay, like except Microsoft. Microsoft is down a bit, right? Only Apple and Alphabet is up. Microsoft is down a little, which I'll probably sell the cash cover put. So this, so correction, Microsoft is not up, it's actually down a bit. Okay, so that's about it. Okay, so let's see what options position I can close today. So I share with you already. Okay. So if I were to sell any Microsoft cash cover put, I will update your live tomorrow. Okay, let me see. Okay, I'm looking at the first screen now, by the way, first screen. I want to see any potential for us to close any position to make money. Oh, Apple doing fine. We are now almost like 20-30%, some of the Apple put contract. So we should be able to close soon for some profit. And we can buy some bubble tea, okay? Hey, by the way, if anyone of you also bought Apple puts, Microsoft put, feel free to share with us, then we can all make money together. Like, one of our viewers, our friend here, Fatty, he also shared with us he has some cash cover put or CSP, cash secure put, same thing on his meta position. Okay, so none of my stocks is like having a 40-50%, so there's no position to close today, so I'll keep it running. I'll keep the position running today. Okay, so also can share with you, SPY put is doing very well. We are now like 43% profit, closer to 50% already. So you see, that's the whole idea of selling options contract. So I want to remind you all, okay, just want to highlight that. Remember, when you sell an option contract, there's an intrinsic and extrinsic value. So no need to confuse yourself. Just remember that when you sell option contract, it's not just the share price fluctuation that makes you money, but there's the time decay. Okay, I repeat, time decay. The time value will slowly decay every day. So you can see SPY so far never moved much, but I'm still slowly making profit every day because of the time decay. So remember, okay, I show you now. So you see the SPY put, second column. I want to show you SPY put, the highlighted part, the mouse, see my cursor there. Can see, let me see. Okay. So I shift the screen a bit to the left side. Okay, so you can see now we are at 42.79% profit. Okay, so I want to demonstrate to you. The past few days, the past few streams we chit chat, SPY, the profit was like what, 41-40%, that kind of stuff. So you can see every day, because we sold option, time is on our side. Every day time pass, we are collecting money. That's the benefit of our option view strategy. Every day, Monday blues, no problem. Tuesday blues, no problem. I'm still collecting money. Okay. So yes, it's very slow. The past few streams we were talking about 39%, 40%, 41%. But you look, today is about 42.8% already. So every day, even if SPY, the stock price remain flat, it can remain flat, no problem. We are very happy. Because of the time value, every day it expires day by day, it decays day by day. We constantly make money. So that's the biggest benefit. It's called theta farming. Okay, theta just means the decay rate. So when you sell options contract, right, sometimes you will see all the theta and stuff. It just means the decay rate. Okay. So that's the benefit and value of selling options contract. Stock price don't move. In fact, we are happy stock price don't move. Okay, good news. We don't move is okay, as long as we keep making money from the premiums, from the time decay. Okay, so that's why I just want to share with you the benefit of this option view strategy. Yes, buy and hold can give you potentially higher returns in a very long run, but not always true. There are times markets stay flat, stocks will stay flat. That is the honest truth. Just cold hard truth. So we are making money from both sides. We buy and hold. If it goes up, yeah, we make money. If it stays flat, no problem. We still make money from the covered cost and the cash cover put. So just a reminder that why we are doing this and why is so consistent. If you understand the option view strategy well, you apply it well, you are patient, you have the rules and system you set, and you're willing to follow it closely, it will very likely be profitable. Very likely, okay? Real life example, you look at my screen. You know, the past few weeks when we sold the contracts, it was still red, right? Because we just sold. Now most of them are green, okay? Can? Okay. Can. So that's all for this today's option strategy. I won't be closing any position. SPY put the target is 50% margin. We are looking for 50% profit margin. Quite profitable. I see the 42% is a 2K profit, you know. So once it hit 50%, the profit may be like 2.3K, 2.4K. Then we can celebrate again, okay? Hey, like I said, if you also sell cash cover put on like SPY, share with us your strike price, your contract dates, so we can learn from each other, understand your thoughts. Then we can make money together, okay? Remember, the purpose of this channel is to make money together, okay? I make money alone, not fun. Everyone must make money, okay? We must all profit. Okay, let me see. Okay, let me just answer some questions in case I miss out anything. Okay, China is holding back on massive broad economic stimulus, choosing to focus on targeted fiscal measure and already budgeted infrastructure. Okay, so yeah, you are referring that actually China has the plan ready, the resources ready, just that they are yet to implement it. So I think, okay, my personal take on China is that the way they do economic stimulus measure is very slowly and incremental. That's why I think that's the issue, you know. Because you do it slowly, yes, I think it creates stability. But the issue is that it keeps the stock price flat or depressed. Usually markets are excited by huge stimulus. Like example, you look at US, unlimited QE. You know, the Fed chairman Powell literally announced unlimited, you know, print and print, and print non-stop, you know. And the market boom, literally boom to the moon. But because China, I don't know why the way they do stimulus is very controlled, so that's why stock market cannot boom up, cannot recover fast enough. So that's my take. So hopefully I mean, China can do more daring stimulus and then quickly push the stock market more, then I can exit to be honest. But I know the downside when you print too much, yeah, then there's inflation, too much money in the system. So I mean, probably they have their own reasons. I wouldn't know. But thanks for sharing. At least I know now that they have some stimulus plan, you know, so-called plan to rejuvenate the economy. Okay, let me see any other comments. Okay, let me see. Oh, Fatty bro, you also exit your China stocks already. Okay. Okay, so we have a view. By the way, we have a viewer here, our friend here, Fatty. His name is Fatty B9M. Okay, but I don't know why sometimes some of you may not be able to see his chat. I also let him know that I cannot see his chat here because maybe YouTube software or what. But I can see it in front of my screen for some reason. So I just highlight that he's sharing a lot of his thoughts on China stocks and his position. So we also hear from him and can learn from him also. September, October is a weak month. Stand by your ammo. Midterm market drop. I think someone also mentioned that midterm is the weak time for market. Is it because everyone spent all their money already? No more money to buy products from company. If you want to invest in China, the politics will move the stocks. You need to see which sector they support. Okay lah, good for you. Hey, I feel happy for you, Fatty, that you managed to exit China stock long ago and make profit. So don't be like me, don't be like me. Keep averaging now, keep holding for long term. Because like I said, I have a habit of not selling stocks. I make the mistake in the past, I sold and I couldn't buy it back at a cheaper price. So I never sell stocks anymore. Okay, that's my own personal rule. But it's a big mistake for China stocks, so I acknowledge my mistake. So don't be like me, don't be like me. I gonna burn left, right, center on China stock. Wow, gonna become, from pigeon become roasted pigeon meat. 烤串 they call it. They like to roast all the meat, right? They're skewers, barbecue skewers, then pour a lot of the chili powder. So I pigeon, right? I gonna barbecue by them. Gonna burn until I cannot take it. Okay. Okay, so that's all for the China. So I mean that's all for the options today. Yeah. Okay, so like I said, if you also do cash cover put, you also do option view strategy, do let us know the stocks you sell options on, so we can find more opportunities for each other. Okay, so next up, I think we are done with the market right now. Let me see what else. Okay, so we just move on to the last part. Okay, so we try to keep our stream within 1 hour, so it won't be too lengthy. So the last part, just chit chat lah, no chit chat. We take it easy. Okay, so hey, by the way, any more questions? Let me know. Feel free to let me know. If I miss your comment, please repeat. Okay, so I can catch it. You know what? We actually have other friends, but don't know why they never drop by. Maybe they're busy with work. Usually we have copyright, right? Flaming soon, all these things. My girl. Maybe they are busy now lah. Maybe they are busy, or they busy making money. Never come and talk to us already. Okay. Okay, I change screen again. So this is the end part. We just chit chat for 5-10 minutes, then we call it a day. So everyone can have a good rest. Okay, so recently I came out with a video, right? I talked about relocating, right? About living in overseas for at least for months, that kind. Then I can rent out my house, that kind of stuff. Sorry, I drink some water. I need some water. So what? Actually, a lot of countries in Southeast Asia, it's very affordable. 1.5k or 2k USD, you can live very well. In fact, the average salary for people in Thailand, Malaysia, or Vietnam, that kind, Indonesia, Bali, is like 700 USD or even lesser. Working professional is like 1k USD, in some of the countries like Thailand. If I recall, a lawyer in Thailand is only making like 1k US dollar. And that's considered quite a lot of money to them. And they can live quite well. So imagine, let's say I make 5 to 6k USD from the option market, option trading. I can just budget like 2 to 3k USD. And I think I can live very well there, Maybe even 2k USD will do. In Singapore, I can spend about 3k USD plus minus. Maybe overseas, I just need 1.5k or 2k USD. So I just want to share that Singapore is really unfortunately getting more and more expensive. And if you are in the US or States, I'm sure you also feel that, right? Like Canada, Australia. Wow, inflation is crazy, really crazy. Recently, I buy grocery and food. My cai peng economy rice, a plate of rice, and you add a lot of dishes. I used to pay like $4, Then recently, they have up price to $4.50, $4.90. Then today, they charge me $5.40, $5.40 for one chicken and 2 vegetables. Ridiculous, 1 chicken, 2 vegetables on top of rice, $5.40. $5.40 now. Ridiculous. And honestly, I think if you go other country, let's say you don't mind, I'll go there for a few months, live around different countries, travel around. I think the quality of life, in terms of value of the money, okay, you also get more volume. Instead of paying like $5 for cai peng in Singapore, I think you can get way more for that $5 in other country. Maybe you can get like Western, or maybe more meat, more rice, bigger portion. So that's why I just want to share with you all that I do have plans to relocate, and that maybe we can do that as part of the bingo challenge. I thought about having a bingo card, right? Then we fill out all the all the targets that we have, then maybe we can go there, live for a few months. I can share with you all my experience. So for those who also want to retire early or achieve FIRE early, if you're comfortable with relocating to overseas for like period of time, like travel overseas every few months and then come back Singapore once a while, or go back to US once a while, I think it is an option for you all to consider if you all want to retire early. Because yeah, if you're in the States, in Singapore, you need a huge amount of income to sustain yourself. 1K, 2K USD can be quite challenging to live in the US or Singapore, to be honest. But 1 to 2K USD can live very well in overseas, in the cheaper countries like Malaysia or Thailand, that kind. So something for you all to consider, okay, just to chit chat on it. So if you all have problem keep increasing your portfolio, or you all are tired of working, okay, let's say you all have a passive income of like okay, let's say maybe you have a portfolio of maybe $400,000. Okay, let's say 400K US dollar, and then every month you generate about 3.5K. Let's say 10%. Okay, ETR give about 10%, right? So you get 40K USD per year. 40K USD per year is about 3.1, 3.2K per month. So let's just put it at 3K. So every month 3K US dollar, if you're okay with going to live in like Thailand, that kind of stuff, or Malaysia, you can maybe just spend like 1.5K or 2K US dollar per month and live very well, and then you still have 1K left to reinvest in the market. So your portfolio can keep growing while you keep enjoying life there. So it's something for you to think about, and then also something for me to think about. And you don't have to live there forever. You can go there for like maybe 6 months, 9 months, then come back Singapore, live for 1 or 2 months, then go overseas again, live for a few years, then come back again. So it's something to think about if you want to retire early. So geographical arbitrage, they call it. Earn money in USD, Sing dollars, be it REITs or whatever, in a strong currency, then spend your money in a weaker, so-called weaker currency, like Malaysia, Thailand, where in Thailand actually not that cheap, okay, maybe Vietnam or Indonesia, Bali, whereby you can get more value out of the money. So that's what I just want to share about today. That's all. And it's not just relocating, it's more like also sightseeing. For those who want to travel, go out, walk, see, look. And you will be surprised based on some of the videos I watch, right? Some people can live for like 500 USD, per month in those more rural, more countryside area of Thailand or Indonesia. So it can go as low as 500 per month, That's very cheap, man. 500 per month, you can live okay. But of course, you'll be eating those street foods, that kind of, I mean, can eat, but may not be the most healthy. But just think logically, if $500 people can get by, imagine what you can do with 1.5K or 2K. You will live very well. So it's okay, let me be is it the first Singaporean? I'm not the first Singaporean. I think there are other Singaporeans that have relocated. So I will go there and try out, okay? Then I share with you my experience. I'm sure there are pros and cons. So I see how maybe there are safety issue, all these things. So if I relocate, I let you all know, okay? Then I share with you all the daily cost of living, that kind. Then maybe you all can think through whether you all want to, if you want to retire early, scared not enough money, then maybe overseas is something everyone can consider. Okay, so just share with you all my plans, okay? That because right now I just think okay, Singapore is getting not just costly but also very crowded. I don't know, some of you all feel that way, my friends. Okay, I'm not sure like Yaf or Fatty Bro or whoever is here, okay? Do you all feel Singapore getting very crowded, and that sometimes it's hard to like even go out to buy some food, like very suffocating? I don't know, rush here, rush there, train very crowded. Even driving, take Grab, the expressway is always jam-packed. Want to move around also difficult. Okay, so that's all today. We try to always keep the stream to 1 hour, because the past few stream I know we always go beyond 1 hour, then everybody very tired. And then I know Wednesday everybody still have to work, so we try to end on time. Okay, you can continue to trade and do more YouTube content intro in the new country. Do your research. Try and experience, relocate, sightsee, learn new language. Who knows, you might appreciate Singapore better. Yeah, I think one of the biggest thing that I appreciate in Singapore is always safety. I think it's something that people, Singaporeans, I think they sometimes took it for granted, really. I've been to other countries, I'm sure you all have been also. You all know sometimes a lot of countries out there is really not safe. Even our neighboring countries like Malaysia, JB, sometimes don't feel safe, you can feel it. And Philippines sometimes got all the kidnapping, robbery cases keep happening. You know, Cambodia, you know, even China, sometimes the food may have some safety issue, that kind. Whereby Singapore, not just in terms of crime, but food-wise, water-wise, the technology-wise, everything got the safety level, you know. You know, you eat food in Singapore, you can quite trust the SFA, you know, Singapore Food Authority. Generally quite safe one. Other country you eat, don't know will die or not, you know. So we see how. When I relocate, I let you all know. Yeah, I agree with you. Yeah, it's damn crowded now in Singapore. I tell you, last time long ago, 10 years ago, let's be honest, when we take the MRT, can find seats, right? Sometimes you feel the MRT non-peak hours really quite comfortable. Nowadays, MRT is perpetually crowded. Even 3 o'clock is crowded, you know. Last time 3 o'clock MRT, mass public transport, nobody. Nowadays 3 o'clock is jam-packed already. 10 o'clock also packed. 5 p.m. lagi worse. Nowadays 6, 7 o'clock, wow, I don't board the train anymore. If it's 6, 7 o'clock, I rather go find some place to sit down, do my work, or eat some food first. And I'd rather not board the train. I'd rather wait for 8, 9 o'clock to board the train. Even though it's still crowded. But 6, 7 p.m., the train is packed until cannot board, you know. I have to wait there for like the next 3 trains, literally the 3rd train when come, then I can squeeze in. No joke. Okay, let me see any other comments or not. Okay, fatty, correct, very crowded. A lot of foreigners go to town. Nowadays we have opened up, so a lot of foreigners come in. A lot of China people in Bugis. It's true. I too early and young to retire. Hey Fatty, how old are you, if you don't mind sharing? I think you're financial independent already, right? Hey Yaf and Fatty, have you all achieved financial independence? Like, are you all now working more for fun, or is it like you all just want to work just to occupy your time, that kind? So you're also financially free, like can retire, that kind, is it? You look at the number of HDB being diluted, definitely for new immigrant. Get more workforce. Cause government give more leave to people. Nowadays I think the national rally, right? I think they introduce more parental leave and family leave, that kind. So need to get more people to cover the work. Okay. Hey, that's all. So I won't hold you all back. Okay, I'm glad that we managed to keep the stream to just 1 hour. So moving forward, we try to stay to 1 hour. So don't always over exceed. Not everyone also tired. Okay, so that's all. I think today we just have a good chat on PMCC, Poor Man's Covered Call. If you miss it, you can check out the VOD later. If you're interested in the strategy, you can try out. Okay, personally, I don't think it's very good for me. If you think it's something that works for you, or you have used it, have made money, feel free to keep using it and share with us your thoughts on Poor Man's Covered Call. Okay, hey, that's all. Thank you so much, everyone. So we will end here. And then let me see other thing. I save most of my pay. So Fatty is sharing with us that his portfolio is pretty decent. Save most of his pay through to options. Correct. So when I was younger, right, when I was working, I tell you, 80 to 90% of my paycheck goes to the stock market. Because back then, I'm really quite obsessed with the stock market. I like to buy shares and keep collecting, buy all kinds of companies. I was like addicted, so I keep buying. And actually, that's the correct move. The more you put in now, the more you invest, likely the long run you can get more. If you invest lesser in your younger age, you have to invest and work longer. So earlier you invest more, likelihood you will do better in the long run, and you can get more returns and retire early. So Fatty is sharing with us. He's only like 28 years old, so still very young. Okay, good job, Fatty. I'm still happy for you that you start investing early. Be assured, long run you will benefit. 10 years down the road, or maybe who knows, 8 years down the road or 5 years down the road, maybe you retire already. Can join our retirement club. Okay, Okay, hey, that's also, thank you very much everyone for dropping by. Very happy to see you all. Good to see you all. Thanks very much. Okay, thanks for saying hi. So, thank you Fatty bro. And thank you Yaf also for dropping by. Thank you so much. And also who else? Who else? And thank you all also for dropping by. Thank you everyone. Okay, hey, see you also. Goodbye everyone. Bye bye. See you all tomorrow. Tomorrow is Wednesday. We stream Monday to Thursday, 9 p.m. GMT. Time zone is GMT plus 8. So see you all tomorrow 9 p.m. I will update you all any position that are open for options. Bye bye.